Hello, I'm Linley Gooden. Welcome to Money Live, an insurance innovators special broadcast series embracing the embedded finance boom, sponsored by Salesforce. Great to have you with us today. Now, together, we've conducted a survey exploring the evolution of embedded finance. And in that research, 92% of you said that embedded finance will be the biggest distribution trend over the next 5 years. And on direct customer relationships, 64% of you were very concerned that embedded finance could disrupt those relationships. So over the next few weeks, we're here to look in depth at how embedded finance is transforming financial services and what it could mean for you. We'll be joined by an array of fantastic guests from the worlds of banking and insurance, talking about how to stay ahead in a fast-changing and competitive market and what you need to do today to get ready. So welcome to episode 1, and today and throughout, we want you to ask the questions that we haven't. Your voice is a crucial part of our time together, and it's really easy to share your experiences and your thoughts. You can do that very easily using the live chat box on this screen. Okay, today's episode is all about navigating the new market created by embedded finance, and specifically we'll be discussing new opportunities to deliver seamless digital experiences and innovative new customer offerings. We'll also be looking at the steps that incumbent players can take to build partnerships to tap into new customer bases and to respond to regulatory change. Before we get underway, a huge thank you to Salesforce for sponsoring today's episode. We couldn't do it without you. And firstly, let's meet our pundit, our commentator for episode 1, Ryan Joyce, the head of FinTech UK and Ireland at Salesforce. Ryan, hello, how are you?
I'm very good. Great to be here.
Great to have you with us. Well, let's jump straight in. For you, why is embedded finance such a crucial topic for financial services right now, do you think?
Yeah, so I would say it's critical to all industries. What we've seen over the last decade is the world's leading brands, the world's most valuable brands, have really focused on providing world-class experiences and have really focused on becoming platform companies. So some great examples with Airbnb and Tesla, Uber, Apple, Amazon that really kind of embody that. And I see that trend continuing post-pandemic. And I think, that ethos is coming to financial services. People, don't go shopping for a mortgage, they're looking for a dream home. So how do you create a whole experience around that and embed finance as part of that journey? And from a brand's perspective, there are some enormous opportunities here, or some incentives for doing this.
So what are those key topics for you, Ryan?
Yeah, so I'd really center it around the top 4. Firstly, improving loyalty. If you can help a customer better manage their money, their most important asset, then you're really going to build a strong emotional connection between them and your brand and build up a lot of trust. Secondly, it's around insights. If you can understand how a customer is spending their money and you can combine that with how they interact with your brand, behaviorally, how they interact on social media, then you can create some pretty unique experiences that are tailored to the individual. Third is around revenue. We've seen some research that would indicate a retailer can increase revenue by 2 to 5x by attaching a financial services product to their offering, typically a card or a loan or an insurance product. And then fourth, profitability. Retailers have recognized up to 50% increase in margin by embedding finance in their journeys.
It really is a chance to link your services with the services that we all care about as consumers. So really interesting. Thanks very much, Ryan. A great way to kick us off today. Let's now hear from Louisa Murray, the COO of Railsbank, and Jean-Charles Velj, the founder of Qover, who spoke to me a little bit earlier about the innovations that they're pioneering and what they could mean for customers. Louisa, how are you, wherever you are in the world?
I'm up in Suffolk. So really nice, lovely. Sunny day up here. Thanks for inviting me onto this. I am COO of UK and Europe for Railsbank. I've been with them pretty much from the beginning. I was employee number 4, about 450 now. Wow. But previous to that, I was very much a long career, very long career in finance and trading. Was one of the first women traders in the city at Barclays and CIBC.
Amazing. I'm sure we'll hear a little bit more about that as we go. And secondly, we have Jean-Charles Velj. Hello, the founder of Qover. Jean-Charles, or JC, how are you?
Excellent, thank you, and very happy to be here. So indeed, I'm the co-founder of Qover, founded this in 2016 with Quentin Colmont. We're now a company of nearly 150 people, and we're doing embedded insurance that I'll explain later.
Yeah.
But very happy to be here.
Great to have you with us, and you know each other already, so we'll get on like a house on fire. Okay, we're here to talk about the innovations that you're both pioneering and what they could mean for customers. First of all, JC, maybe you can kick us off by telling us about your services and what make them so innovative.
Yes, sure. So the way we pitch Qover, we say that it's the Stripe of insurance, okay? And let me explain to you how we see that. If you look at the economy today, you know, tech is not vertical anymore. Tech is basically a horizontal that goes through all the verticals of the economy, right? And everybody that's winning on that tech horizontal, I would say, well, all those people need insurance to either embed insurance into their product or their service to enhance it, or either to cross-sell, upsell insurance. And those tech businesses in any vertical, really, well, insurance needs to be two things for them. It needs to be one, digital, and secondly, it needs to be cross-border. And if you look at the traditional insurance industry, well, first, it's not digital, obviously, or very sketchy so. But secondly, it's fundamentally local. And so what we've built to cater to that problem is a digital native insurance company without a balance sheet that is by design, agnostic on the product, so we can do any vertical, and by design agnostic on the countries. And so we are already present now in 33 countries. And so we see each other, ourselves as a one-stop shop for any new disruptive or digital business to go and integrate very seamlessly insurance products into their offering. That's what we do. We work with big companies like Revolut, like Moniz, one of the biggest electric car manufacturer, and so forth and so on. Glovo, Deliveroo, so many of the people of the new economy, and we offer at scale, if you like, cross-border digital insurance solutions for them.
Wonderful. It's that cross-boundary element to what you do, which is really interesting. I'm sure we'll get into that more. Louisa, lovely to have you here too. And you just launched a new offering, Embedded Finance Experiences. Tell us, what does that mean and how does that work?
Right. So embedded finance experiences is not just a new offering. So it's a new category, and that's the importance that we give it. We've had the journey of open banking, open finance, banking as a service, cards as a service. And I think all of that put together has allowed us to move into a much more wider and exciting area of embedded finance experiences. So it's this vision that represents the next phase of growth for embedded finance. And we're moving away just from basic banking, cards, etc., to deeper, richer financial and loyalty experiences. And loyalty really is the end game in all of this, whether we're talking, you know, sports teams or retailers, insurance companies, etc. So we've had some research commissioned. And we've uncovered that there is a real growing demand for new and improved financial experiences. And all of these will equal better rewards for the customers. So about 39% of consumers are interested in accessing financial services like credit, loans, or investments from the brands they know, love, and trust. And that obviously rises in the youngsters, the 18 to 24-year-olds. But at the same time, 41% would be interested in a card that offered early access to tickets, exclusive offers, or other high-value rewards. So Nigel, our co-founder, he always says, you know, people don't buy a car loan, they buy a car. My analogy of that is, you know, I don't jump onto my favorite, you know, clothes website and say, oh, I'm going to have some buy now, pay later. I buy that fabulous pair of jeans, and you know, I've been looking for ages and viewing, and the buy now pay later is just absolutely embedded in there, and I don't even have to think about it. So we've seen it already from Uber. You know, they embedded finance into their customer journey, remove the hassle of paying, giving them a card and everything. And the financial transaction is absolutely embedded in that. So enormous market, lots of potential. You know, we're speaking to some really interesting companies, lots of sports brands on this, and, you know, really started to empower all sorts of companies.
Yeah, I don't know about you, Louisa. I actually love a bit of buy now, pay later. That's exactly what I go shopping for.
Yeah.
JC, you wanted to say something. You had your hand up there for a second. Yeah.
No, I completely follow that, Louisa, and it's very interesting what you guys are building and the real embedded finance experience. Well, we do that in the insurance world, and it's really embedded insurance, and it's to make sure that insurance is just there. Okay, one of the big problems with insurance is that nobody wakes up in the morning thinking, cool, today I'm going to buy an insurance product. It's the most boring thing in the world,
I
right?
must call my insurance broker.
Exactly.
Buy now, pay later. Yeah.
And so the whole idea is, how can you embed this at scale,
Yeah.
so that insurance is just a product that is there, and when you need it, whenever you need it. And so that's the best way to do it, and that's what we try to do with our customers.
One of the things that both of you talked about, actually not talked about in many ways, is the precise vertical. You've talked about it being cross-boundary, essentially. JC, just a quick one on that point. In terms of embedded finance, insurance in your case, how important is it to be able to do everything? I mean, because that is something that's been out of fashion for a while. More niche has been the way it's gone recently. So why is cross-boundary important, cross-vertical?
Yeah, it's a good question. We decided to go very wide with our product. From day one, we decided to be multi-product, multi-country. I think it's an order of magnitude harder problem to solve than going, one country, one problem, of maybe 2 orders of magnitude. In a certain way, we've cracked it for the moment. We can do it at scale. I think it's really important for all very large corporate clients. We go after the B2Bs in very different verticals. That's why the opportunity is so massive also,
Yeah.
The real question is the focus that we put. So we have 4 verticals, and we go only after those verticals this year, but every year we can add an additional vertical, very much so like Louisa, I suppose.
You both talked about tailoring your offerings to in non-financial contexts. I mean, that's assumed by what we've talked about just now. But first of all, to Louisa, how does it improve customer experience, do you feel?
Well, I think it's enhanced, isn't it? And lots of this is maybe the customer doesn't know they want it, but if it's there, then they will use it. But it is absolutely enhanced. They'll see things maybe that they didn't see before. We're speaking to different types of companies that the different parts of their website are disparate. There's the merchandise over here, ticketing over here, and it'll all be put into one one place, and it'll just be easier. Yeah, absolutely easier.
Does it improve access, perhaps? Does it mean, yes, you may be aware of other products, but actually it allows you to get access to things that you perhaps didn't feel were within your reach before as a customer?
Absolutely, and definitely with loyalty programs as well. I think there's lots of potential here. The TikTok and the Instagram, people love all that type of thing to belong to clubs and things like that. And if we're given access, by loyalty programs and points and things like that to, to different markets who've done it before, then, I think it's really exciting and gets engagement and brand loyalty probably even earlier than it already does.
JC, what do you feel about it, particularly with that customer experience in mind? I mean, you have to offer a great customer experience for this to be viable anyway. So they kind of feed into each other, don't they?
Yes, completely. One of the things, I'll give you an example. We're pretty strong in bike insurance, okay? And so what typically, when you bought an e-bike before or whatever, you would go to your broker or go online and fill a form and so forth. Here we embed it at the moment of purchase. So you configure your bike, there is one button at the end that says buy insurance. You click on that's an API call to my backend, and you pay your bike directly with the insurance embedded in it. This is 10 times better customer experience that you ever had in insurance. What makes it special here is that this is again cross-border. So we give to alternative distribution. So the bike dealers become actually the insurance brokers in that sense. And we offer that at scale across Europe. And so you see that it's super easy. It's streamlined across the different countries. with the pricing streamlined and the whole customer experience. And that changes the game really on how you perceive a financial product that used to be you buy something and you had a financial product that you needed to buy next to it, right?
Yeah.
Embedding it is really putting them together and it's just there. And that's the whole idea.
It is stripping down the boundaries. And I wonder, Louisa, in terms of non-financial companies, what are the opportunities for non-financial companies to move into the space that banks traditionally held? Is that a good thing? Is it a healthier thing for the end customer? What do you feel in terms of that bringing other players into the market?
Well, I think this is the exciting and extremely healthy thing about it. So, historically, we've had about 80% of our business from fintechs, and they've offered some great products, from the legacy banking type products. But last year we have seen this growing trend. It's non-fintechs, so normal businesses, literally all sorts. We're talking, retailers, we're talking lenders, we're talking, sports clubs and things like that. So all different verticals, and probably led by the retail. And they're all waking up to the fact that there's an amazing opportunity here to engage with their customers and something, it's been highly unimaginable before. So sports clubs get even closer to their fans. Retailers get closer to those that, we talked about the buy now, pay later. Maybe, wouldn't have thought about buying something before, but can now, and not too risky. But we're really seeing everyone take greater control of the financial relationships, and that's the really exciting thing for us. And I think that the opportunity is enormous and globally, because lots of these brands are global brands.
And JC, what about traditional insurers? I mean, yes, you might have felt that your toes are being stepped on previously, but to work in collaboration, in partnership, to have access, to have this healthy relationship, which means a lot to customers, that's got to be positive. But I wonder how traditional insurers might feel about all this.
What we offer to insure, we don't have the balance sheet, so it's a traditional insurer that actually will carry the risk. And I don't see it. I see it as the pie growing, to be honest here, really. And what we offer to our insurance partners that will take the risk, access to the new economy, access to a Deliveroo, access to a Revolut, and so forth, where traditionally it would have been extremely difficult for them to cater to those clients because of the tech that they don't have, but also the mentality that is completely different. And so I see it as a growing pie more than anything else here.
Final thoughts, really. How are financial services bound to change? Louisa, first of all, what do you think the changes will be?
Well, I think what we've seen is, especially going back to the fintechs, is that they build products that consumers or customers want, and that's what we're thinking about. We're literally thinking about the end user on this. Whereas historically, banks maybe they've tended to build what they've thought these customers wanted, and the fintechs only thrive and grow, and I put ourselves there when we see growth in our customers and the customers and the fans or consumers engaging more. So I think that's the important thing, that there's lots of opportunities out there. We're at the tip of the iceberg on this. We really haven't discovered where we can go from this. There's an open landscape here, so I think that there's lots that can be done, said. Fintechs at the forefront of that, but these brands can be fintechs too.
And JC, it's almost a philosophical question. What will financial services look like in the future? But what do you think will fundamentally shift?
There's many things that are changing, and the opportunity, like Louisa said here, is enormous across the fintech, across the insurtech. I think who will really gain at the end of this is the final customer. Okay, because the relationship has always been with financial products, banks, and insurers, always a bit conflicting, complicated, and certainly didn't receive the service that was supposed to come with it. And again, to speak about insurance, the moment of truth is the moment of claim. When you have a claim, that's the moment where you prove that you have added value. Well, in a model where insurtech thrives, not only is it easy to embed, to buy those products, to have it covered, But in a fully connected digital world, your claims experience needs to be superb. And that's what the whole industry is working crazy hard on. And we also at Qover. It's a promise that we do. And in a digital world, that's a promise that you need to keep. And so the ultimate person that will win here is obviously the final consumer with a better product, better user experience, better service, and much better pricing also.
Wonderful. Well, thanks very much, Louisa and JC, for joining us. Great to have you with us today. Thanks a lot. Thank you.
It's a pleasure. Cheers.
Yeah, thanks very much to JC and Louisa. Great to have them with us. And before we move on to our expert panel for the first time, let's speak to our pundit, Ryan, from Salesforce. Ryan, well, first of all, what were the main takeaways from our chat there for you?
Yeah, well, it was great to hear from Louisa. I thought she articulated the story around creating experiences and incentivizing consumers with rewards and loyalty really, really well. That statistic around 41% of people expecting rewards or some sort of incentive from their relationship as a cardholder was really, really interesting. And it's, quite obvious in retrospect that a lot of that is being driven by the youngsters or the Gen Z generation. And I think Railsbank have done such a good job of that. Their partnership with McLaren F1 is a really great example that you could use a financial services product from McLaren and get, race tickets or access to the pit lane or something really, really cool like that. Yeah. And then I really, really, really like what JC was saying as well. He talked about the expectations in insurance changing. We need to move to a market that's 100% digital. We need offerings that are kind of pan-European or global and accessible everywhere. And I think they've done a great job of that with their multi-product offering. If you look at some of the brands they're working with, like Revolut and Deliveroo, it's phenomenal. And, the Deliveroo example, particularly, they're offering an online embedded insurance journey for over 100,000 Deliveroo riders that are bringing their own bike or motor vehicle to work across 13 countries. That's phenomenal scale.
Really is. I really enjoyed talking about the sort of cross boundary in terms of the business as well. Really interesting to be able to sort of apply to so many different areas of our lives. Look, clearly embedded finance does present a real opportunity for innovation. Well, so how do you think embedded finance can sort of unleash innovation across the industry? Because we all want to innovate, but it's not always easy to get there.
Yeah, I think we're going to see some really great examples emerging very quickly. Firstly, personalized experiences. So imagine that you are now banking with Nike and they could see all of your spending patterns and they could see that you're spending money at the driving range and that you've booked some flights via British Airways. Well, maybe they'll start to present some personalized offers for golf equipment or golf wear, and maybe they'll offer a travel insurance offering for your golf clubs when you go on holiday, using those insights to create something in context and offer you the right product at the right time. So that's one example. Secondly, I think personalization around the product itself, with this abundance of data that can be brought together across, people, how people are spending their money, but also behaviorally how they're acting on social media or how they're interacting with a brand like Nike. That creates the opportunity to provide financial services products that are tailored to the segment of one, with unique rates, with unique fees, with a unique term to suit that individual's needs. And then the third example I'd say would be around risk management. Again, using that, leveraging that abundance of data, you could start to underwrite a loan with much lower risk, depending on, based on data you've been able to gather. So there's a great example in China with My Bank, who have embedded an SME lending proposition into the Alibaba marketplace. And they're collecting over 3,000 data points or variables around how a small business is selling online, NPS scores, e-commerce data, CRM data. But they are able to complete an application in 3 minutes, make a decision in 1 second with zero human interaction. And they have done that with a default rate less than 1%, having lent over $500 billion. It's phenomenal statistics.
Really comprehensive with so little friction. That's really, really interesting. Well, Ryan, thanks very much. Great to have your thoughts as ever. Let's now hear from our wonderful expert panel. We'll be seeing you for the next few weeks, but starting off with the introductions. First of all, Jana Winter. Jana, hello, how are you?
Very well. Thank you very much, Lindley. Very happy to be here in such a good company.
Great to see you again. Nice to see you. Well, Jana, if you don't know already, is the Chief Information Officer at Generali UK and for Generali Corporate and Commercial. She's a strategy and technology expert with extensive IT experience and has successfully bridged the gap between business strategies and IT organizations. And Jana has an established reputation in leading and delivering large-scale transformations. So great to have you back with us. Second of all, we have the wonderful Dr. Evangelos Avramakis. Evangelos, hello, how are you?
I'm fine, thank you very much. Thanks for having me here. Thank you.
Great to have you back with us. Evangelos is the head of digital ecosystems R&D at the Swiss Re Institute and an internationally renowned advisor and thought leader in insurance. His particular focus is on forward-looking market developments, digital ecosystems, omni-channel management, and innovative business models. Great to have you with us. And last but not least is Peter Lee Johannesson. Hello, Peter, how are you?
Great, thank you. Thank you for having me.
Great to see you again. Peter is head of strategic partnerships at DNB. Now, DNB is the largest financial institution in Norway and second biggest in the Nordic region. And Peter's team execute partnerships primarily with fintechs, but also bigger corporates, including Google. Peter's team also run the DNB Accelerator, focused on venture investments and key accounts for DNB partners. Great to have you all with us today. Now, let's get started straight away. First of all, what impact is embedded finance already having in your industries? Jana, if you wouldn't mind kicking us off, what impact is it having right now?
I will mention two elements of impact in insurance. So if embedded finances, take a piece of finance functionality, abstract it, and make sure that it's available in the ecosystem to provide services to the ultimate customer. I mean, this is a problem that we have had for a very long time. I have started to call it B to E to C, business to ecosystem to customer, because it's relatively rare that we generally go directly to the customer. So even the B to E to customer, it is a complex problem. On the retail side, it's a little bit easier to imagine. I mean, a very famous example is Tesla. In North America, you can buy a Tesla car, and it already can come with an insurance. But actually, I'm personally more excited about some examples in corporate and commercial insurance. It is a very complex world. Our ecosystem is very complex.
Yeah.
I can give one example, which is risk engineering and loss prevention. And I'm sure that I will come back to that example in our conversation.
Yeah, Evangelos, it makes sense that you would tie perhaps the insurance to a product, because it's then very relevant. So you can buy it at point of sale and all those things. But it is very complex. You know, an ecosystem by its very nature can be very complex with multiple partners, multiple routes in and information that you have to share. What do you think? You know, is this the solution, do you think, at the moment? Do you think that's the way industries are looking at it?
So the question is, who's driving this transformation? And in the very end, the customer is driving it. So the customer is accessing natural touch points that are not the ones he had before, that might be very new to him, because there's a service which is very convenient to him to access that one. And the question is for us, how can we be part of this kind of, new environment? So we need to think in a different way. It might be more complicated because we lose the kind of direct control, direct access point, the customer. So there's an indirect way, making it from an architecture perspective more complex. But that's the new reality. There's no way around that. So just get used to that and just do that. Okay. The other question comes actually with the data exchange. So are we just plugging in, or are we exchanging data and insights and provide more a personalized environment? And this is a different journey that we need to consider. Absolutely. And Peter, what's your take? We often look at the Nordic region and we think, wow, it's some really interesting work and there's really interesting customer relationships there. So what's your take on embedded finance at the moment?
Yeah, I think for us, it's a lot of interesting discussions coming up from this. So for us, it's both from the technology point of view, what should we do for meeting this demand for the future, and also for the business model part. When we look at the business model part, we look at a lot of new entrants coming in. Like Amagolas also point out, the data part for us is very interesting. So if you look at, for example, how Amazon is partnering up with ING and using the data of Amazon to provide loans through Amazon Surface, this is really something that we believe is going to be more fitting for the future for the banks, and something that we have to position ourselves for.
Great. Well, that takes us neatly into the future. And the Salesforce MoneyLive survey also suggests that 35% of customers' product acquisitions would happen in the future through non-financial channels, and that's by around 2026. So in the next 10 years, how do you think embedded finance could grow, and what could be the impact? First of all, Jana, yes, complex. Yes, many moving factors there, but is this the future, do you believe?
Oh, certainly. And it will get even more complex because, again, that level of granularity of these financial services getting lower and lower and lower. So then the question is, how do I compose the services for my client? I have been thinking about this. Let's take a hypothesis 24 months from now. An employee starts a new job, and the employee needs to have employee benefits and insurance and health and pension, etc. Do we want that employee to be worrying about all of the pieces, or do we want to have seamless experience? Should they all be from the same insurance provider, or choose the best for our employee? So it's not always customer goes and buys something. There's so many different channels into insurance. And we generally need to be able to provide that flexibility. Again, and we need to mention that we're still in the pandemic. Things are not going to be simpler. And again, employers need to be protecting their people better. So to have that flexibility in the ecosystem, to do the best experience for the employee, especially in the event of a claim, should the employee be able to trace exactly where that piece of insurance came from, or should it be a seamless experience? So it will get more and more complex. There will be more and more on the market. It's not a question of one solution will resolve it. Maybe we need to be good citizens and plug into the ecosystem.
Yeah, Peter, that makes a lot of sense. It is, it will get more complex, of course, but ultimately, if the focus is on customers and what customers are buying and what they need, then ultimately and inevitably, this was going to happen.
Yeah, you can say it that way, but at the same time, we have regulations that will put some limitations to how far this could go. But at the same time, I totally agree with Jana. This is and Amagolas on that the customer is in the driving seat, and we have to adapt to the customer needs here.
We've heard from Jean-Charles and Louisa about some of their work, but Evangelos, how can more established players, do you think, take advantage of the new innovations out there?
So I think there are 2 or 3 things to be managed simultaneously. One is, to me, the business strategy. So do you want to take part of this kind of new opportunity, or are you sticking to what you did so far? And if this journey is a new journey to you, then the question is, can you do that within the incumbent environment, or do you really need to create something from scratch aside of this organization? Just because, at the beginning, everything will be very slow. You need to learn, you need to fix, you need to realign everything. So it's not going to be that easy to do. And this journey requires a lot of, new skill sets, understanding of new indirect clients, if you will. Your technology skills might be also different. You need to be more in an agile environment because you need to adapt in a different way. So there are a lot of new challenges that you need to manage simultaneously. And that's not so easy because the core business is still driving the profits and the value, right? And then you need to create something that at the beginning makes sense, but potentially does not accelerate the way you have imagined. However, if you don't do that, you might be just too late to plug in later.
Well, that's the question, isn't it? And I suppose, Evangelos, that if there's any resistance, and there's bound to be resistance, it's a big task to take on, to do things this differently, and a huge shift has to take place right now. If, as the research says, 35% of consumers will be buying through their retailers in 4 or 5 years' time.
that's the new reality. So just get used to that and just try to prepare the best you can, because in 5 years from now, this might have changed again. So you need to reshuffle actually the value proposition. So what? So this requires actually a more dynamic, agile, very flexible framework, the way we operate, but the way we deal with the opportunities. Because nobody can tell you what is happening 5 or 10 years from now. But if you're not ready now, how can you even compete in this kind of new environment? So it's a readiness assessment, but also it's a huge leadership challenge to my mind.
Absolutely. Jana, look, I mean, there are great opportunities out there, but yes, being dynamic has been the name of the game for a long time now. It is never going to be easy. You're at the forefront of this, trying to turn, what used to be an industry that would be fairly slow to react and a large ship to steer, to be something responsive, to be something forecasting. That is the job now, isn't it?
Absolutely. And I was nodding and agreeing with everything that Evangelos was saying, because yes, it will be more complex, that flexible framework. And I'm just going to point out 4 things: integration, data, orchestration, and cloud.
Yeah.
And in these 4 areas, we have different levels of maturity, and each industry has different level of maturity. But exactly as Evangelos was saying, it's not 5 years from now you wake up and say, "Oh God, I missed the opportunity." So flexibility comes at a cost. And to me, especially, I'm just going to pick one of them. Why not? I'll pick the orchestration. It's getting more and more complex, because I need to be able to orchestrate within an application, across applications, within a business, across businesses, across my ecosystem. What happens if we have gone customer to my ecosystem to me? So that orchestration at the moment is particularly challenging. And I know that, for example, including Generali, we're starting to use artificial intelligence specifically for the orchestration, because it's going a little bit beyond the predetermined algorithms.
But for me, maybe one of the biggest challenges is the mindset of my leaders, because they always would like our channels to be the main channel, and then thinking distribution to other channels, that's a difficult thought. Because also on the technical side, for us, we invested a lot of money into open banking. And we have now technical capabilities. We have people that is able to create these APIs that we can enable embedded finance. So for me, it's just build up on that, and we can be out there. And what we see, at least, is in many of the discussions that we have around embedded finance, being the first one to integrate, give you some kind of exclusivity, because or the company you integrate with, in many cases will not choose other providers. So for example, within insurance, you have a ski app, and you can buy insurance through that app. They choose one provider.
That's a really good use case, though. Is if you can be the first on the block, I know people will follow, but that exclusivity is a very powerful sales pitch to the leaders. This is actually worth doing right now. I guess that's something you have to do, because you've got to tell them about the opportunities, and also you've got to tell them about how important this will be as a channel in the future, Peter.
Yeah, exactly. Because the biggest worry for leaders are, of course, that this will turn out to be a marketplace, and then you'll be commoditized and the prices will go down. But what we've seen so far has been the opposite. It takes time to integrate. It takes time to negotiate the commercial contract. And then you have this, it doesn't have to be written exclusivity, but you have a sort of lock-in effect anyhow. So that's the trend we're seeing. But of course, if this becomes marketplaces where, for example, Tesla has 5 different insurance providers, then this is a downward spiral for us, and not a very suitable game for the finance industry.
Jana, opportunities. Just briefly, tell us about the opportunities that we can tell the leaders of our businesses are out there.
I will still pick examples: risk engineering and loss prevention. I promised I'll mention it. So imagine that you have 60,000 mobile phone masts. You need to be able to insure them. And year on year, things change. Do you want to have that manual reinsurance every year? Do you want to have inputs from, for example, would it happen that some of the masts have been in earthquake area and they have they're more exposed to danger. And that logic, whether it's mobile phone masts, whether it is buildings, that whole embedded finance is not only finance outwards or insurance outwards, but also outwards into insurance. How do we get information about earthquake areas? How do we get information about the status of the buildings? How do we go? Again, in insurance, a big element of the game is not just, okay, you have a claim, we'll pay the claim, but how do you go about the prevention of those risks? Yeah. So if we have, back to Evangelos' explanation about that complex framework and orchestration of all of the pieces, we need to be open-minded and open banking-minded, only joking, but to be able to get the feeds in, get the feeds out, just to enable those new models, because we know that the data is there.
Yeah.
It's a question of how we use it.
Yeah, Evangelos, models. This concept is a new model. So how do we start to move towards that in terms of the way we work as a business?
So I think in general, what happens is that you just start from what you know, because this is the easiest way to transfer the skill sets. So if you need to insure now Tesla as an example, you just take your value proposition and try to transform it in a way that you can plug it into Tesla. However, potentially you might get access to new data sets that you need to incorporate within your business model, because this will create both values for Tesla or for the customer. So it's different than the way you worked before. And if you add additional kind of data layers or insights, then the whole complexity of your architecture gets more difficult to manage. So think about, you don't have one supplier like Tesla or one OEM provider, that you have 10 different ones. So are you doing that 10 different ones in the same way with a different environment, or are you urged to have a kind of generic framework where you easily can plug it in? And this generic kind of dynamic over time will urge you to provide a solution that is scalable. Otherwise, you have hardwired solutions for each manufacturer, and this will kill you on the long run. Yeah. So you need to think not only from a business opportunity perspective, it's great to insure every car manufacturer, but also to think about, what does this mean if we need to be more granular to offer different business models and stuff like that. So it creates a lot of uncertainty, but also more complexity. And you need to manage that on an opportunistic way. So immediately, because you need to plug in as fast as possible, but it will require more time. We just heard it, it's not that easy. But on the long run, you need to be very flexible to adjust actually the model that fulfills actually a number of needs. And this is really the complexity you need to face on.
Yeah, and that is the new business model concept, isn't it? To say this model or that model is probably wrong as well, because actually flexibility is the new model, the new way of working. We'll finish off in a couple of minutes with regulation, but first of all, Peter, what about partnerships? Our Salesforce Money Live survey found that 65% of companies have already invested in partnerships with non-financial services brands. Sounds very, very sensible. What do you need as a bank in terms of what should partners bring to the party? How can they respect what you do and work closely with you, and then you can work together very, very well? What do you need?
I will answer Jana's question earlier and continuous topic around data, because I think that's a very interesting way to look at new business models. So a lot of companies have a lot of interesting data for us to do credit scoring, for example. So if you go back to the Amazon example, which I was referring to, here Amazon have the transaction data, and they know a lot about their customers. So based on Amazon transaction data, we can do credit scoring and give loans through Amazon surface. In this case, you have created a product that we are not able to create ourselves because you're using Amazon data, and we're using a partner's surface to sell this product. Still, Amazon allows you to use your branding, and it's a totally customized journey for the bank. So the customer knows it's the DNB they are banking with. So I think this is a great example on a partnership, which we will see more on, which for DNB, we wouldn't be able to create this product ourselves. We need a customer base that we are we wouldn't necessarily meet the, and for me, that's a good example on a good partnership within the space.
Okay, let's finish off with regulatory change. The Salesforce Money Live survey found that 91%, a whopping 91% of senior industry executives expect that regulators will eventually require changes to the sale of single choice embedded finance products so that customers can think about the alternatives. So basically opening up the options. So how can banks and insurers stay ahead of that? How do you stay ahead of this requirement that is expected? Maybe I'll throw it to Jana in principle. I know regulation is always a difficult one to handle, but while we all as customers have choices and more choice than ever, how can we as providers stay ahead of that and be the place that customers want to go to?
I'm going to quote you, Lindley. You said that.
Oh, really?
Flexibility is becoming the new business model, right?
Right.
Absolutely. Because, all right, so what has been going through my mind now in this conversation is, one example is sanctions. The other example is post-Brexit.
Yeah.
In post-Brexit, we had to implement a lot of changes because of regulator requirements. Okay, I'm not going to go into that. It is complex, but maybe sanctions is a little bit more I would say understandable at the moment, because again, in that business to ecosystem to customers, sometimes to even work out who owns a business, who is the ultimate parent, where are the sanctions, what is that, again, how do we put all of the pieces of data together so we can satisfy the regulator requirements for sanctions? It is one of those multidimensional puzzles for which technology helps, data sets help, externally provided data help. Back to what Peter was saying earlier, sometimes we need to use all that we can to even just satisfy regulator requirements. So sanctions is an interesting subject, one of my favorites, and definitely grounds for innovation.
I'll throw it finally to Evangelos. I guess regulation formalizes what customers already want or need. That's essentially, in the best possible scenario, what's happening. So what do you think about the future regulation and how, the industries have to respond to this?
So as you just mentioned, there's a customer perspective. Also, what's the interest of the customer? But also there are some new players entering the market where they attack actually the opportunity from an indirect way. So think about the big techs that are, offering preventative service that are not regulated in an insurance environment, but it's going to be very easy to them to say, by the way, now switch on, you got an insurance protection. Just because they got more data, they're able to do that in a much more convenient way than we did before. So I think there will be also new regulations coming from the new participants' perspective, because access to data and sharing some insights or some data will be actually key in order to be competitive in the future going forward. And I think this is a new term. So far, we were comparing ourselves against the insurance and the insurer environment. The future competitive landscape might completely look different. So this is why I would expect also regulation will need to take this into consideration.
Well, thank you very much to the three of you, to Jana, to Evangelos, to Peter. Great to have you with us, and you'll be back with us in the next episode to talk about adding value and combating the threat of disintermediation for the financial services industries. To help me round off today's episode, I'm once again joined by our panelist and pundit, Ryan from Salesforce. Ryan, really interesting stuff. What advice would you give to anyone watching us who wants to get ahead of the curve to make sure that they're making use of opportunities from embedded finance right now?
Yeah, it was really interesting listening to Jana, to Peter Lee, and to Evangelos. And I think they all agreed that data was an imperative here. So in terms of things to get right from a technology perspective and how you harness that data, I would pivot really around three things. Firstly, building a single source of truth, or a customer 360. So how can you pull together all the data points or insights that you have around somebody's financial goals, their spending behavior, what assets they hold, and any associated data that might be available around how they have, their interactions with you, behavioral data, etc. Secondly, is the use of artificial intelligence and analytics to curate that data and create some insights off the back of it. And that can either be used to drive personalization, maybe improve the risk management process, which we touched on earlier. And in some cases, maybe that can be packaged up and sold on from the provider to the brand in order for them to provide a better experience. And then the third would be around API management. So all of this is reliant on APIs to allow a seamless experience in app. So if somebody is applying for a financial product, let's use the example of banking with Nike again. Well, you quickly want to complete the onboarding process, arrive at a fast decision as to whether you can get access to a loan or a credit card. And also anything around, customer service or, follow-up communication with the provider should be made seamless as well. So I would pivot really around those three areas.
Yeah, it gives you that really comprehensive, again, cross-border, cross-boundary way to work with customers. Also then work with your partners. That's interesting you said about feeding that data back to them perhaps. Well, for you, just thinking back to our episode today, what key things would you take away? What key things should we take away?
Yeah, there's so much to unpack, isn't there? It's been a fantastic session. Look, for me, we're living through a major shift. The world's leading brands are really focused on providing experiences, and that is coming soon to financial services. Embedded finance is the next frontier of this, and we recognize that there's a $7 trillion opportunity over the next decade. What we heard from Railsbank and Qover about some of the exciting things that they're doing with the world's leading brands like McLaren and Deliveroo and Revolut. So you can see the innovation coming. And as we touch on that innovation, we see some opportunities around, personalizing the experience through rewards and loyalty. We also see an opportunity for personalized financial services products themselves. So either through tailoring a product for the segment of one or providing concierge style services around that to provide PFM tools, etc. And improve risk management, which we went into in quite a lot of detail. But ultimately, as the final panel talked about, the real imperative to unlock competitive advantage here is really around data and technology. And I think it's truly exciting, and there's lots of lots of innovation happening and unfolding very quickly.
Yeah, absolutely right. Well, thanks, Ryan, very much for joining us today. It'd be great to have you with us. And a huge thanks to all of our contributors to episode 1. And do join us again this time next week to watch episode 2. We'll be hearing from Daniel Globison, the head of open banking at NatWest, on their cutting edge work in open banking. We'll also have many more insights from our expert panel on exploring the new boundaries of embedded finance. In the meantime, please do send us your feedback by completing the review form here on the webpage. Of course, if you like the episode, help us out, share the page and spread the news. Okay, it's time to close. Thanks again for joining us, and see you again next time. All the best.